Stocks are off to their best start to a year in decades. But can and will this rally continue? Kara Murphy is the Chief Investment Officer at United Capital, and she joins us now. So, Kara, let's just start, I guess, with news of the day. We had a very bad retail sales number this morning. The market reacted negatively. Now it's kind of clawing back. Are you surprised either by the data or the market reaction? Does it tell you anything that the market had, I guess, been telling us at the end of last year?
Well, I say these December retail sales numbers, the market really got wrong. Going into that print, numbers were, in many cases over 1%. Instead, it was more than a 1% decline for December. And this came off of, a fairly strong early part of the holiday season. So I think what we're seeing is as these retail sales declined in December, the economic picture was still quite strong, but the sentiment around the economic future and around the market was quite negative. And so I think, if anything, that's really what was driving perhaps people not buying as much as expected in December. Now, it's interesting that the market has really shrugged this off. I think the market is telling you that they're expecting the January numbers to rebound along with what we saw would happen in the market to a very strong, chapter after December fall.
So what do you see as the catalyst to make another high here?
So I'm really watching trade as a potential positive catalyst going into the second quarter. I think the market has not priced in the trade issues being resolved. If Trump and Xi do ultimately sit down and come to a resolution, that's going to be a big weight off the market. And what we've seen is that a lot of companies, particularly during this earnings season, a lot of them have been citing weakness in China and in Europe. And having, a trade resolution, having better sentiment around global growth is really going to be a potential driver for the market.
Yeah, Kara, I know you're big on international politics, right? I was looking at your bio, and I see you studied a lot of that, right?
That's right. That's right. It's been a lot of years studying international politics.
All right, but let me ask you about domestic stuff, though, because Jay Powell has basically told us that he's not going to do anything with rates, or he can't figure it out, doesn't know where it's going. So in other words, if rates aren't going anywhere, doesn't that mean stocks aren't going anywhere? Maybe not down, but maybe not up.
No, I actually think that's the best thing possible for the market. So the market sold off 20% in December on concerns that the Fed was pushing on the brakes too hard. Now that we're not just paused, but it looks like we're paused for the foreseeable future, I think you take that break off the market, and then it just continues to revolve around, underlying economic growth, which with the Fed on pause can be quite strong.
Now, something that we've heard more and more concerned, I guess, a concern from the analyst community is the idea of an earnings recession, right? We're starting to see estimates, certainly for the first quarter of this year, look like they're going to be negative against the same quarter last year. 2019, the earnings picture in general, getting a little bit more cloudy here. Are you concerned about an earnings recession and how some stress in the corporate space could impact the market?
So this is something that we're watching very carefully. And if you go back to the first quarter of 2018, we had this very strong corporate tax decline, which came right down to the corporate bottom lines. Even aside from the corporate tax cut, though, corporate earnings were quite strong. A lot of that was probably that corporate tax cut being back economy and helping other companies. So I think what we're seeing in 2019 is some of that, fuel coming off the fire a little bit. So we've been paying very close attention to operating margins. And so far, what we've seen in this most recent earnings season is that operating margins continue to be quite high and have been holding. So we still think that corporate earnings near-term picture is fairly strong, but we're watching it carefully.
So let's talk about a couple sectors that you favor right now. Value over growth, also healthcare and financials making the list for you. Which one do you like more between healthcare and financials?
Oh, that's a good question. So it's a bit of a barbell approach because I favor stocks that don't necessarily rely on the next dollar of GDP being earned. So areas that have secular growth trends, and I think healthcare fits in that quite nicely. Financials, on the other hand, tend to be very cyclical, dependent on overall level of earnings and yield curve. So that might mean that people will shy away from it, but that also is why valuations are so low. They've been really beaten up. They're heavily regulated industries, and I would argue that they're overcapitalized at this point. So they're really a nice pair. You have your bit of cyclical and you have your bit of secular.
Got them both. All right, Kara Murphy, Chief Investment Officer at United Capital. Thanks so much for joining us.
Thank you. Have a good one.